I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned in to Traders Nation. Thanks for making us a part of your day. Don and I have got a packed show. Brad Williams, he's back with us here today. He's president of Brad Williams Financial Services. We're going to be talking with him about consumer debt. It's hit an all-time high again. Is this a big surprise? Americans are big spenders, but do they have it to spend? We're going to be talking with Brad about that. Plus, Don and I are going to be talking about retailers. It's a nice tie-in, plus payment processors into this whole shebang of consumer debt and spending. Who's got to process that? Retailers and payment processors do. So stay tuned right here, guests, and a whole lot more. We'll be right back.
Traders Nation, if you promise not to tune out, we promise not to talk about you while you're gone. Traders Nation. Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation, delivering what you want when you want it. Traders Nation. Traders Nation. Live.
It's on the whole time.
Bringing traders coverage of the markets, solid trading strategies, potential hot stock movers, world-class guests, informative callers, and unsurpassed market chatter for traders to take all the way to the bank.
You guys got some great stuff coming out. I mean, it's a great station.
Stay on top.
This is always changing. It's always fresh. Something new.
Stay tuned in. Traders Nation.
It's always something to look forward to.
Clearly, you can hear the difference. Traders Nation. It's the Traders Nation Network.
Traders Nation Network.
Hi, I'm Steve Forbes.
Yeah.
You're watching Traders Nation.
Steve Forbes. Steve Forbes, Don. Okay?
That's right.
You can check out that interview over at TradersNation.com or our YouTube channel. Of course, under Traders Nation, right, Don? Hey, Don, so listen, here's the deal here. We were talking about this. We've been following retailers and payment processors since the fourth quarter of last year, as we do every year, right, Don? And so let's start off with our retailers, Don. What are your thoughts here? What's going on out there? Certainly some of them are missing it. Kohl's one of them, but go ahead.
Well, it all started today, pre-market, with Macy's.
Yeah.
And they didn't make the number. And, you know, they've been struggling for a while, but the stock is just down. It's down almost 20% now for the day.
Sure.
It's down to around $26, let's say, actually underneath.
Yeah.
And that took the rest of them with it because some of these retailers are really struggling. Kohl's is down big time, 7%. Guess is down. They're all down.
Yeah. So.
And the problem in retail is that these stores just simply have too much overhead. And if you glance at one stock, TJX, which is
TJ Maxx,
TJ Maxx and Marshalls,
sure,
they're holding up because they're closeout specialists.
They are. They've done well.
Yeah.
They've fared well in the market. You know, they're a go-to favorite, Tom, for a lot of
people.
people.
You know, you go into these stores like Macy's and Kohl's and the rest of them, and they are just absolute. You know, around the holidays, I'm speaking. They are just absolutely jam-packed with merchandise.
Yeah,
and it's all marked down to begin with, and then at the end of the day, that squeezes the margins, and then here we are sitting in January, and well, here's a shocker: Macy's didn't make it.
You're right.
So
yeah.
You know,
yeah, you're totally right, Don. So let's talk about this for a minute. So you're right. So you're going to find a ton of in these big box stores. You're going to find a ton of merchandise and ghostly spirits everywhere. The halls are empty, right? The only lines you're going to see are the return section. Okay, that's going to be in the back. So let's talk about some of this. Certainly, you brought up Kohl's. Kohl's gap down today. Nice go-to place for shopping, too, but nonetheless, they're in that space, that big box space. Kohl's, KSS, is the ticker symbol for that, trading at $64.86. 5.4 million shares exchanging hands here today, gap down today from that report you're talking about. Reporting, they're sucked down in that downdraft of that retailers not reporting very good, in fact, disappointing holiday sales down. So Kohl's one of them. On the other side, who's making the money? Amazon and Walmart. They're online now. Okay, Amazon certainly AMZN. Okay, currently trading at $1,648 a share. Nice reversal off that $1,350 mark that we talked about, up $200 since we did, quite honestly. Indicators right now, if you bring your charts up, they're all MACDs, moving averages, all that are starting to roll over. They're starting to turn over. So potential rollover here on Amazon, but nonetheless, keep an eye on it, Don.
Yeah. Well, we have a group of companies, unfortunately, in retail that just have to go. I mean, if they were zoo animals, they'd put them out of their misery.
Right.
Because there is just, across America, too much retail.
Sure.
And some of these retailers that should be gone, obviously Sears is going to be gone soon. That's really a real estate company now.
It is.
And of course, JCPenney has to be put out of its misery. But a lot of these companies, like Kohl and like Macy's, you're going to see some very serious store closings with a lot of these outfits, because, on the same scale as Sears, because they discount 52 weeks out of the year. When you walk into these stores, if it's not Christmas, it's now Valentine's, following the January closeouts.
That's right.
And then we get into the other parts of the year, and it's complete discounting. The list price means nothing.
That's right.
In nobody
pays retail anymore. I mean, really, nobody does. Everybody's professional consumer. Thanks to Amazon and some software programs out there, everybody's a professional consumer. And they're going to get the best deal, right? And these big box stores simply are buckling under the pressure, and unable to compete with some of these online retailers like Amazon. They just simply can't, Don. And so, their model is toast. It's gone. It's only a matter of time.
It's a vicious cycle because, as I just said, they're discounting 52 weeks a year.
It is.
And when you read the reports on these companies, their margins get. They're just murdered. Kohl's, Macy's. It's difficult. Now, if you take a look at Walmart, Walmart, on the other hand, is kind of holding up in here, and they are going after the Amazon model. And I've shopped at online with Walmart, and they're pretty good. They made a purchase a couple of years ago of a company called Jet. So they've really beefed up in the online sector. So Walmart is a operation that's to be reckoned with, and they've got the staying power. Much more so than some of these other companies.
That's probably one of the only companies really at the size and backing that Amazon should be concerned about is Walmart, trading at $94.04. 2.4 million shares exchanging hands here today. $8 up since we spoke about it last. If you look at your charts on this one, very similar to Amazon. Indicators here are also starting to roll over. MACD and some of these moving averages, money flow, things like that, turning over. So we'll see. Catch it on the downside if, in fact, it does decide it's going to roll over. All right, Walmart, a WMT. The only one that really kind of compete in the market. Hey, real quickly on JCPenney, Don, they saw the writing on the wall. I remember about 5 years ago, they were trying to rebrand themselves, and about the only thing they really did was go from JCPenney and did their logo from JCPenney to JCP. Okay, it's like, that's not enough. It's not going to do it. Certainly, the tail's on the tape here today. Let's move on to some payment processors. Huge win for payment processors. MasterCard currently trading at $195.11 right now, Don. 770K shares exchanging hands here today on that bad boy. Up $10 since we spoke about it last. Saw a nice reversal off that $172. You got your charts up on this. That was right around that Christmas time, okay? It's trading right below its 200-day moving average. I'd like to see it get above that, but unfazed by this dividend it had the other day. Not a big dividend, 33 cents a share. Usually the market will adjust itself down for that amount. Didn't really happen. So MasterCard had a dividend. Just the other day, if you were in it, you got some of it. MA is a ticker symbol. Don?
Well, on MasterCard, and we're going to talk about, I guess, Visa and PayPal and Square, these companies aren't going anywhere for a very simple reason. They process payments.
Yeah.
And they really don't care if the payments are being made at a retail outlet or online. And, of course, being that the trends are online, these companies have done very well. So MasterCard trading in here at 195, let's say.
Yeah.
You just talked about the chart here.
Yeah.
And these are, look, they can have a couple dollars swing either way.
Yeah.
But these companies have bright futures, and, of course, MasterCard being the leader. And then we can go on and talk about Visa.
Yeah.
A little bit smaller, but that's another one that's holding up. So the payment processors, and, of course, we have some other new players coming into the payment processing market as well. So we've seen some IPO activity in that market last year. So payment processors, as we have talked about since we restarted the show, these are strong. These are strong issues. You got to pay attention to these companies.
Absolutely. So just so you know what Don's saying, these payment processors, they don't care if their people are purchasing from Amazon, Walmart, or Kohl's. They don't care because they're purchasing it from everywhere. They're getting their processors from everywhere. And that's what we're going to talk about Brad Williams today. We're going to talk about how consumer debt hit another all-time high. The number is just going to blow your mind how huge it is. And it's actually a big concern because the number is so huge. Visa currently trading at $138.19. Like Don said, 9.1 million shares exchanging hands here today. Bring your charts up on this. Handsome, beautiful-looking chart up $9 since we spoke about it last. Trading right above its 200-day moving average. Resistance on this trend line is $140. That's where your resistance is at. All right, Visa. V is the ticker symbol. All right, we're out of time, Don. We'll come back. We'll shotgun PayPal out. Square. Let's do that on the other side. Coming up next. Yeah. Coming up next, though, Brad Williams, consumer debt, all-time high. How's it going to affect you? You need to know this. We'll be right back.
Traders Nation salutes America. Stay strong, stay proud, and stay in the green with us. Traders Nation live, bold, and packed for profit every weekday morning.
Traders Nation, live, bold, and packed for profit. Sign up today for our weekly HTML newsletter and check out the Traders Nation store for products to enhance your stock trading day. Traders Nation, what you want, when you want it. Traders Nation.
Hey, Jeff Carlisa here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again in the new year, Brad Williams. He's president of Brad Williams Financial Services. Brad, welcome back to Traders Nation. How are you today?
I'm doing great, Kurt. Good to be here.
Yeah, always a pleasure for sure, Brad. Hey, listen, so U.S. consumer debt, Brad, hits an all-time high once again. Credit debt, very bad. Notably, from October's $25 billion non-revolving credit. Okay, so it's non-revolving. It's not credit card stuff. Looking at student loans and auto loans. What's going on there?
Well, with the interest rates being so low, a lot of cars were being sold under low debt, and I think as people started right now starting to see debt, the interest rates rise, they're grabbing them. And I think last fall, as they saw the rates rise, they were grabbing the best deals they could. So that's one of the reasons. Student loan, people are, after the last recession, people, trying to improve their skills. So we've seen that go up. Now, the problem we have with that is that debt bubble, that student loan debt bubble.
Sure.
Because student loans are not often, or I should say often, when you go and you get a degree in Middle Eastern basket weaving and you got 50,000 student loans, it usually doesn't translate to a good job.
Yeah, so you think folks are starting to figure that out, that basket weaving is probably okay in the classroom and easy to get through, but not okay out in the real world in the market, right?
Not if you want a job, a real job. So
right. So even if basket weaving, so let's say they're going back. So let's say you get a bachelor's in basket weaving, they're saying, hey, maybe that didn't work out too good. Let me go back for my master's in something that's tangible. So maybe is it where we're seeing some of that student loan come in, where it's not only just a bachelor's, but they're going even to a higher portion of education, right?
Yeah, and I think sometimes some folks stay in college to delay their entry into the real world.
Yeah.
I've actually had some clients who had issues with kids for that very reason. They kept getting a degree because they really didn't want to have to get to work.
Right.
But oftentimes it's for good reasons. It's just people need to do a cost-benefit analysis of why they're getting a student loan.
Right.
And we've got, the government and the colleges kind of shellacking the American public. One raises their tuition, the next raises the debt limit, and, it's like a vicious cycle.
Yeah, I have to agree with that. So let's move on to the autos then. So certainly interest rates are starting to rise. Folks are wanting to pick up a new car. Folks are kind of feeling good. The economy's humming along pretty well, better than they've seen in recent years. They're feeling a little bit more optimistic, would you say? So why not make that purchase before those interest rates move on them? But I guess the other big question is that should they make that purchase? Because getting into debt is a big decision, especially on a car. And Brad, I don't want to keep adding to this question, but Brad, cars nowadays, man, I don't know about you. I went out and looked at cars. It's like $68,000, $70,000 for a car. I'm thinking, I paid that much for my first house. I can't bring myself to buying that for the car, right?
Yeah, I agree. And we just bought a car last weekend. We had a car totaled and had to go get another one.
Sure.
And, I did my shopping, bought a previously owned one, and I never buy new unless there's some extravagant reason for doing it with a deal. But you just shop and get the best deal. But you're right. They are. When you look at like I drove an Expedition before it got totaled, and a brand new Expedition, you pay $50,000-$60,000 for that.
That's a lot of
money.
And
that's just that is a lot of money, and is it really worth it? Especially when you drive off the lot and it drops $15,000 the second you get down the street.
Yeah, so
so
let's turn that around then. So looking at $50,000-$60,000 instead of having a drop when you drive off the lot, shouldn't we be investing that $50,000-$60,000 somewhere and have it compounding over time? Better solution, right?
Yeah, just don't look at the car as your personality. Look at it as transportation. That's what I've always done.
Right.
Get something practical, and that so many people are leasing now because they can get a big fancy car, and they don't think it costs them as much because they're looking at it in terms of monthly payments.
Right.
And it's more than that.
Right. Right. All right. So, and quite honestly, that's a whole other subject too, leasing versus buying, right? All right. So let's go on to credit card debt. That's the revolving side of this story. So credit cards, Americans are doing what they do best, and that's spend money that they really don't have. Okay. If there's one thing we can do great, is spend money we don't got. Credit card usage surged billions of dollars. They're bringing this total debt. Everybody hold on to your shorts, because we're going to talk $1 trillion plus. That is so huge, Brad. How are we going to even combat that? How are we going to safeguard from that kind of debt on the consumer side?
Well, that's a good question, because interest rates are rising, and credit card companies are going to follow, although they charge exorbitant amounts for it already.
Right.
They've got a good mentor to learn from, and that's the federal government.
Yeah.
So they're real good at spending money they don't have. So Americans are just following suit.
Sure.
But it's people are just going to have to watch that, because that was a big problem back in 2008.
Yeah.
And that caused a lot of issues. People were looking at using their houses as an ATM machine and racking up credit card advances, and every time you turned around, you were getting an offer from a credit card company. Hey, get zero money for a year, and although that seems to have slowed down quite a bit,
right,
but people are still racking them up.
Let's talk about 2008, in particular September, around that time frame, where it was a rare moment, Brad, where the world shifted beneath our feet. Okay, and the markets froze. The financial industry looked as if it was going to be nationalized. So banks, are they going to be worried about this debt that we're seeing now at $1 trillion? Are they going to be concerned about that? Can we reface something that we saw back in 2008 again?
Well, with regulations, they've gotten a lot tighter.
Okay.
And so I think the more they deregulate, the more we go back to community-type banks, the better off we are, because you're not dealing with massive, huge banks.
Right.
And plus, community banks do a better job of servicing their clients because they're local.
They're local.
And I deal with a community bank, and I love it. I don't want to deal with a big bank.
Right. Well, and they seem to be a little bit more conservative on their lending practices, too, because I know I was with U.S. Bank, and they kind of made it through 2008 area where a lot of other banks were panicking because they did loans that they probably should have never done, or did loans because of deregulation that were forced on them. Whereas some banks where they're a little bit more conservative, they kind of fared through it better, and I think some of those community banks are more conservative, would you say, than some of those national banks?
Yeah, they are, and they have a feel for their local community. They know when things are rising, when things are falling, and they know people's reputations, and oftentimes a big bank may not give a loan to a businessman that a community bank will.
Right.
And because they know he's good for it.
That's right.
And so, there's a lot there. The banks are in a little different position because they're not so highly leveraged the way they were in 2008.
Right. Okay. Well, this is where it comes.
You don't have all those credit default swaps to fall back on.
That's right. That's exactly right. Plus, those local banks, they know the face. They could care less about the number, like some of these other banks. They know you by a number. These local banks, they know you by a face. So, what's the best way to resist debt and save more these days?
Well, just live within your means. It's kind of a simple formula.
It really is.
Make sure that your income exceeds your outgo, and but don't just let it sit there. Do something with it.
Yeah. What kind of tools are available to do something with?
Well, there's all kinds. The market's kind of in a peak, so be careful, how much you dive into the market at this point, because it's showing signs of the last legs of a good bull market. But CD rates are coming up, and looking at income-generating securities. Okay. If you're in an older position, obviously, if you're younger and you got time, just use the indexes and let it ride.
We're out of time, Brad. Where can we find you?
AskBradWilliams.com.
AskBradWilliams.com. Head on over today. We'll be right back. Stay tuned.
Thanks, Kurt.
You bet. Welcome back. You are tuned in to Traders Nation. I'm going to do a quick mention. Get a copy of Pro Online Trader DVD. When we're talking about support and resistance, moving averages, rolling over, charts, patterns, candlesticks, all that good stuff, and it doesn't make sense to you, man, you got to get on over to TradersNation.com. Get a copy of this DVD for $29.95 plus shipping and handling. Like $6, we'll get it out to your priority. Man, you can't get this DVD cheaper anywhere else. It'll cost you a couple $100 if you try to get it elsewhere, Don.
Yeah.
TradersNation.com. Click on that more button. Yeah.
Please call today and have your payment method.
That's right.
Ready.
Three easy payments. No, I'm just kidding.
That's right.
I'm just kidding. Don't do that. Hey, PayPal. I want to talk about PayPal here today. We promised to talk about shotgun stocks out on the other side. Don, PayPal is one of them. PYPL currently trading at $89.40. What's going on there?
Well, PayPal just expanding technology, and one of the early players in the trade.
Yeah.
And then along with MasterCard and Visa, they're three of the bulwarks. And then we can move over and talk about Square.
Yeah.
Square is another company, younger, run by the guy who started Twitter.
Yeah.
And here we are with a $65 stock. It's down.
Yeah.
And it's taken a beating, but I just saw where they've also announced some new technology. So Square is another one that's going to be in play here.
PayPal and Square, handsome chart on that PayPal too, man. Bring your charts up on that. Don, you know anything we talked about?
No.
Yeah, I don't either. These aren't buy or sell recommendations at all. We do appreciate you tuning in to Traders Nation today. We'll catch you on the next edition. Have a great day.